Let me tell you where it's not. There's plenty of capacity around. People like the product. People want to see the product grow. The capacity is there.
Welcome to Trade Treasury Payments, the podcast unlocking the future of cross-border finance.
From transaction banking and money movements
to liquidity, treasury, and cash management.
We bring you expert insights on the latest trends shaping global finance.
Welcome to Trade Treasury Payments Studios. I'm Eleanor Hill, Treasury Editor at TTP, and I'm delighted to be joined today by none other than Richard Wulff, who is Executive Director at ICISA. Richard, welcome. How are you doing?
I am doing well, thank you very much.
Good. It's so good to have you here and to see you again. I last saw you in the House of Lords, I think it was last year. But we are here to talk all about ICISA. So it turns 100 this year, unbelievably. Founded in London in 1926. So if you had to pick the biggest single thing, the biggest way that trade credit insurance and surety has shifted since then, what would it be and why?
Very clearly, if I look at the menu of the dinner that the guys had in 1926, it was all nice and national, everyone within their own national boundaries. That's totally changed. It's become a real international business. The scale has grown tremendously, probably, facilitated by IT, which started maybe in the late 70s, early 80s. But those people from 1926, they would not recognize this sector.
I love that you went down the menu and knew what they'd had. That's brilliant. But it's such a great way to reflect how things have moved on. And like you say, IT has made huge changes as well. But just looking at some of the stats from ICISA. So estimates from 2024 say that trade credit insurance supported around 15% of global trade that year. That's underpinning roughly 9.25 trillion euros of transactions. But at the same time, that was a year where we had a lot of insolvencies, we had supply chain disruptions, geopolitical fragmentation, you name it, it's still all going on now. What do you think that figure really tells us about the industry's role in economic resilience?
Well, first of all, we calculated this because it's always said, you're a credit insurer. Aren't you small and sweet? And you're not really that big. Well, 15% we think is kind of a big number. And we use it for officials, for regulators, to show that we're kind of important to the economy at large. And what it does do is it puts a lot of responsibility on our shoulders. Because if that 15% would reduce drastically, maybe the world economy would not look as it looks today. Now, what we proved, and that gives me pleasure, during COVID, that figure barely budged. It went down a couple of percent. It came back really quickly. And it shows that we are underpinning the global economy. It shows that we can handle the heat.
Yeah, you're here to stay.
Yeah, absolutely.
Yeah. And like you say, people, I think, tend to underestimate it. Don't even sometimes know what credit insurance really does, really facilitates. And there's a lot of that almost patting on the head when you talk about it, isn't there?
Well, let's start at the beginning. I mean, you tell people you work in trade credit insurance and you usually would get a blank stare. And that's one of the functions of ICISA, to get people to know the product, those people who can really use it. And that brings a little bit of education with it. And when people look at trade credit insurance a little closer, they say it's a cool product. It's good for the economy. It's good for the people who buy it. And it's good for the bankers and financiers who are supposed to put money in the real economy.
Yeah, exactly. There's a lot of benefits going in many different directions. But Richard, let's talk a little bit about your work with CPRI, because that highlights that the market's become much more complex. We're seeing many more participants, more tailored products as well. And we've got growing multilateral usage too. Where are you seeing the most pressure today, though? Is it in the product itself? Is it in claims, regulation, capacity? Tell us a little bit about some of the challenges you see, and also how ICISA is helping members stay aligned on sound underwriting.
Let me tell you where it's not.
Okay.
There's plenty of capacity around. People like the product. People want to see the product grow. The capacity is there. And again, it's a question of education. A number of market participants have never heard of the product.
Yeah.
Where I see the biggest pressure is in regulation. Our friends in Brussels, they enacted, if you may, Basel 3.1 in CRR/CRD, and figured that the loss given default of credit insurance is 45%. In layman's terms, if a credit insurer goes bankrupt, the 55% will be paid, 45% will not. That's, first of all, ludicrous, because it's not even close to that figure, and research has shown that. The biggest pressure now is to get that figure to a reasonable level so that banks can use trade credit insurance, CPRI, as a risk mitigation technique. If that figure goes down to a reasonable level, and I'll let everyone decide what that is, I think the market will grow all by itself.
Okay. All right, be some arguments going on among the audience about what that level is, no doubt. We'll hear a bit more we'll get some comments on some of this going out, I'm sure. But Richard, if we look ahead, we've talked about a little bit about the 100 years so far. We've got another 100 years to come, hopefully, or second century. What are the 2 or 3 practical changes you most want to see across the market on digitalization, data, workflow, and what would success look like to you, even if we looked 10 years ahead?
Hey, enjoying this podcast? Hit that follow button for more. Done? Let's get back to it.
10 years ahead is a lifetime in this industry. But what I would be looking at, the way of doing business, B2B business, is changing. There's a lot more platform business. I would see it as a success if our industry embraces that, builds product for that, and enables those platforms to do business. That means building new processes, building new ways of assessing risk, and I think that's quite a chore. Now, that's one, but now the bigger one. I see trade credit insurance in Europe, a bit in North America, a bit in Latin America, a lot in Oz. Where I do not see it is in the economies who need it most. So the developing parts of Asia, African continent, where people are screaming for financing. You just need to read the ADB paper on the finance gap, and you see how people need financing to kickstart their economy and basically to make a living, to feed people. Now, credit insurance is a way to provide collateral to banks so that they can lend. In order to get the credit insurance in those areas of the world, we need a little bit of an entrepreneurial spirit. That I have faith in. That is not going to be a problem. We need some stability, political and economic, and that's a little bit harder. So what to me would be the biggest success is, and let's focus on Africa for a moment, that credit insurance becomes a well-known and well-used product in Africa to use as basis for financing so that people can feed themselves.
Yeah. That's certainly a goal to aim for, and I'll have to revisit in 10 years' time, Richard, and see where we are. But you will be in a different role by then because you're actually leaving ICISA. So anything you'd like to say in terms of a farewell, or do you want to give us a preview of what you're up to next, or are you keeping it secret for now?
I am not keeping anything secret. I will tell you, I will not be riding the train in rush hour anymore. I will not be putting my alarm clock daily at 5:45. I hope to stay in touch with the industry, but not in a full-time role.
Yeah.
I thought long and hard before I made this decision, but I figure in my role you have to be pretty fresh, pretty close to the market, and after a certain number of years, you're not that fresh anymore. That's why I'm leaving, no other reason. I hope to stay in touch with the industry because if there's one thing about this industry, it is full of nice, inspiring, and good people. Yeah. Love to stay in touch.
Oh, well, we will certainly be in touch with you, Richard. Don't worry, there'll be an awful lot going on. A lot of invitations coming your way. We wish you the best of luck, though, with everything to come, and enjoy the Lions.
Thank you so much.
Thank you for joining us today, Richard. It's been a pleasure.
And don't forget to follow Trade Treasury Payments
on your favorite podcast platform.
Thanks for listening.